Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Question here is, let's see, if the I wouldn't say, well, this is the question. If the long-term trend of the dollar is up, which I don't know if you're saying that either, but this is the question. Is it a good time to buy a 6-month call? So, Steve, what do if you look at a long-term trend, obviously a 10-year trend, 5-year trend, 3-year trend, whatever, they're all down for the U.S. dollar. So how do you reconcile that with trading an option that's 3 months? How do you look at, do you go back 10 months or 10 years, or do you look at what is the period of time that's appropriate for all of our listeners, the attendees?
Okay, wow. This is a fabulous question because not all these currencies have history that you can go back and look at. Some of them are newer than others, in the case of yours. So what you have to do is you kind of go back and you kind of look way back in the past, and on something like here you go, this is the dollar versus the yen, the Forex dollar versus the yen chart. So somebody asks a question, watch what I have to do here to see if there's any support below these current prices, and I have to show many, many, many more months here. I have to change my range here to maybe 50 years. And I'll look back here, and you'll hear all the time on the radio or the TV or CNBC or something, the NASDAQ's making a 10-year low, or this one's making an 8-year low, or that one's making a 5th. Well, then you have to go back 8 years and see what the picture was back then. The picture back then was, again, there was a period of accumulation way, way down in the 86-cent level for the dollar versus the yen. God forbid we should get down there now, but as you can see, when we broke these lows over here, we kind of broke the lows, but we kind of snapped back up into this very, very long-term range in a hurry. Okay, so there was some buying down here. There was some buying interest down here. Probably the government of Japan, for all I know. But once again, when you actually look at this chart, the long-term trend for the dollar has been down. No question about it. Okay, we've got lower highs all the way over here. We actually started going into some steeper trends here, and this is, I'm sure anybody who's a trend trader will tell you, the steeper the angle, the more likely that these are going to get busted out. Okay, so at this point in time, we could rally up to one of these intermediate or shorter term trend lines. Possibly this one might not be an issue because it looks like it's been traded through once. We could rally up to this intermediate term trend line at $1.20 and still resume the real long-term trend down. Okay, and we could actually bottom in the 87, 88 cent level, without a doubt. So it's good to kind of chart multiple markets over multiple time frames, and that's why I use it with newer indexes so that I have an idea where I have a big theory. There's limit orders all over the planet to buy things, okay? And the whole reason price moves like it does is that you run into an area where there's a lot of limit sell orders or limit buy orders or option barriers or whatever, some kind of support and resistance you can't see. So, I'm kind of letting the chart tell me what it wants to do, and can't fight the little trend here in the dollar. It could be a temporary reversal, but right now it's making me money.
That's what we're hoping for. One last question, Steve, and then I want to let you go. Got a question, and it's, what is the difference in option cost between the FX and the equity market? This is a similar question than you and I took just a couple minutes ago, but I just, again, I'm getting it again. So what options are best to buy in the FX market? Would you say in the money, at the money, or out of the money?
Wow. In the money, at the money, or out of the money? I'm not checking the deltas all the time. I probably should, okay? But since I'm...
Conceptually, right.
Yeah, go ahead.
I was going to say just conceptually, because people sometimes get caught up on this, and I just looking for your view, because I try to sort of tell them they need to go in a certain region, I should say. So if you like, this is my view. Don't get caught so much in the deltas. I mean, although I teach deltas, I spend hours and hours on that concept. But there are three categories of strike prices: in the money, at the money, or out of the money. And people have to decide if they like to be like a long shot predictor. Then out of the money options may make sense. But for some of us, we like to probably have an option that's going to act more like the underlier. Then the in the money makes sense. I think everybody should always look at the at the money, because that's sort of a balance of them. And we have so many strike prices with the ISE FX options in every 50 cents that there are a lot of choices. What's your view, Steve?
Well, I've got the euro chart up here, the dollar versus the euro. I'm buying 62.50 calls at the bottom of the trading range, so that's at the money. Okay, I'm not looking for anything below there if I'm buying a call. Of course, if I'm going to do a put, I've got to go below there, and I'm going to sell the put if I'm going to try to do that kind of strategy. And again, if you sell the put below there and the prices are falling, you might get a decent premium, because a lot of people, like you say, they like to play around with the out of the money stuff, and then they wonder why they're not really successful at options. At the money is probably a good way to go, especially if you're new.
That's a very good point. So that's what I always try to say. At least look at the money, and then you can go from there, maybe slightly out of the money. And as Steve was saying, if you start to go in the money and deeper in the money, another alternative maybe is the spot itself, because it's going to act so much like the spot. That choice is up to you. But another thing to think about is how far do you think it's going to go? We just had a friend of mine was saying that he thinks the dollar yen is going to go to, let's say, 111 or 111.5. Well, I said, okay, well, what are you going to buy? He says, well, I'm going to buy the 114 calls. And I said, well, what are you buying those for? That's such a long shot. You just don't, you would need such a huge rally for the dollar to get all the way to 113 or so before you saw any movement in your option. You need to sort of have a balance there. So maybe, more of an at-the-money option. But I really appreciate all of your insights, Steve. I think you just do a great job of taking it sort of right back down to the practical standpoint, not getting too involved with all of the esoteric information that a lot of people get involved with. But I just want to say thanks. I want to just, again, give you the microphone one more time if you have any sort of recommendations or any places you're going to be for education that I may not know of, or just to talk about, Online Trading Academy for one last brief moment. Please do that, and then we'll sign off. Okay, Steve? But thanks again.
Thank you, Steve. And all I could say about Online Trading Academy, folks, is that I'm one of those guys when I started trading that found that I needed a little bit of help, a little bit of one-on-one, a little bit of hand-holding, if you would. And having the opportunity to repeat the class as many times as you need gives you also the opportunity to see a bunch of different traders and instructors come in and talk to you about different strategies. And remember, I may not be the guy that's going to turn the switch on for you, but there's always an opportunity to come in and meet somebody that's going to be more towards your style and help you get to the point where you can work for yourself, and it's really enjoyable. But you got to have the passion, you got to have the willingness to learn, and me personally, I love it. I've been up since 2 o'clock this morning because I'm a Forex spot trader too, so it's a long day, but it's not work. It's fun, okay? And I will be finishing a course here in Boston at the Boston Center teaching the Spot Forex. I'll be teaching the Spot Forex in L.A. Next week, if you go to www.tradingacademy.com, if you're interested in taking a course, you can get information on their website there for next week. I have a trip coming up to Detroit pretty soon, and I also have another trip coming up to Arizona in the future, teaching stocks or whatever. And whatever you're interested in learning, that's what Online Trading Academy is here for. Try to help you empower yourself and take control of your own financial trading destiny.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.